Tariffs ruled illegal, markets dropped. Your 30-year bond yield just hit 4.97%. I'm advisor Andy with your daily market wrap-up for Tuesday, September 2nd. The appeals court decision on tariffs sent shockwaves through both stocks and bonds today. The Dow fell 249 points, the S&P dropped 0.7%, and the Nasdaq declined 0.8%. But the real story, Treasury yields jumping as investors realize the government might have to refund $172 billion in tariff revenue. Here's what matters. The 30-year Treasury yield touching 4.97% is approaching the psychological 5% level, historically a headwind for stocks. When bonds pay 5%, why take equity risk? Yet markets are still pricing in a roughly 90% odds of a quarter-point rate cut in September. That's the disconnect. Rising yields signal inflation worries, but the Fed's ready to cut anyway. President Trump says he'll ask the Supreme Court for an expedited ruling tomorrow. Until then, tariffs remain in effect, but the uncertainty is rattling markets. It's worth noting countries that already negotiated trade agreements that include tariffs should not be affected. What this means for your wallet. If tariffs go away, you'll see lower prices on imports, good for your budget. But if the government has to issue more debt to replace that revenue, higher yields could mean more expensive mortgages and car loans. It's a classic trade-off between lower consumer prices today and higher borrowing costs tomorrow. Friday's job report becomes even more critical now. The Fed's watching, and so should you. Follow me for more financial insights and money tips. I'll see you tomorrow.